Hey everyone, and welcome back to the Deep Dive. Ready to jump into something pretty wild? Today we're diving headfirst into the world of cryptocurrency investing.
Yeah, it's a hot topic, that's for sure.
It really is, and honestly, I think we all kind of want to understand it better.
Absolutely.
Right, like is it the future of finance or just a fad?
It's the million-dollar question.
Or, should I say the Bitcoin question?
Oh, there you go.
Anyway, enough with the puns, let's get down to business. So, we're using a fantastic resource for this deep dive, an article from Investopedia called How to Invest in Cryptocurrency.
Published September 10th, 2024.
Super recent, which is essential in such a fast-moving world. So, our goal today is to go beyond just defining what cryptocurrency is. We're going to explore how to approach it thoughtfully as an investment.
Yeah, we're going to arm you with the knowledge to make informed decisions.
Love it. Okay, first things first. We keep hearing about Bitcoin, 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 but I have a feeling there's a lot more to this story, right?
Oh, absolutely. I mean, Bitcoin is definitely the most well-known cryptocurrency. It's the OG, the one that started it all. But there are literally thousands of other cryptocurrencies out there.
Thousands, seriously. See, that's what's so overwhelming for me is like, where do you even begin?
They can definitely feel like drinking from a fire hose, that's for sure. Which is why it's important to start with the basics. Before we get into all the different types of crypto out there, maybe let's take a step back and just define what cryptocurrency actually caps up.
Okay, yes, back to basics. Because honestly, I still picture those like guys in basements with their computers mining. I don't really get it.
Well, think of it as digital money.
Okay, sure, but like Venmo is digital money, right?
True. But what makes cryptocurrency unique is the technology behind it, which is called blockchain. This is the real game changer.
Blockchain, yeah, that word gets thrown around a lot.
Yeah. Right. It's basically a digital record of transactions. Think of it like a ledger. But instead of being kept in one place, it's distributed across a network of computers. So every transaction is verified and recorded on this shared ledger.
So it's like a giant public spreadsheet that everyone can see and verify.
That's a good way to think about it. And because it's decentralized and spread across so many computers, it's incredibly secure.
Okay, that's starting to make more sense. So it's secure, transparent, but I also keep hearing about how volatile cryptocurrency is. Like the price can swing wildly.
Yeah, that's the other side of the coin. It can be a very bumpy ride, especially compared to traditional investments like stocks. Crypto is definitely known for its dramatic price swings.
Okay, duly noted. Buckle up for the roller coaster.
Yeah.
So knowing that, how do we even begin to approach this as an investment? It's a lot to wrap your head around.
Well, that's what's so fascinating about this space. There's so many different ways to get involved. It's not a one-size-fits-all situation.
Okay, that makes me feel slightly less intimidated. Tell me more.
Well, the Investopedia article breaks down a few different approaches to crypto investing. You can buy and hold crypto coins directly.
Right, so like actually owning some Bitcoin or Ethereum or...
Exactly. Or any of the thousands of other coins out there, even the really obscure ones. You can invest in companies that are somehow related to crypto.
So, like, the companies that are actually mining cryptocurrency or
Mhm.
creating the technology behind it.
Yeah, all of that. Companies that make the hardware for mining, platforms that allow you to buy and sell crypto like Robinhood or PayPal, even companies that just hold a lot of Bitcoin on their balance sheets.
Really? Companies are just buying up Bitcoin as an investment. Is that even allowed?
Oh yeah, it's becoming more and more common. There's this company, MicroStrategy, they've been buying tons of Bitcoin. It's fascinating to see how it's becoming more mainstream.
Wow, that's a bold move. Okay, so we can buy coins directly, invest in crypto-related companies.
Hmm.
What else?
You can also invest in crypto funds, like ETFs or mutual funds that hold a basket of cryptocurrencies.
So it's like diversifying your crypto portfolio without having to pick and choose individual coins.
Exactly. You can also invest in a crypto Roth IRA.
Oh, a crypto Roth IRA.
Yeah, so you get the tax advantages of a Roth IRA, but you're holding cryptocurrencies instead of traditional assets.
Wow, that's super interesting. Okay, and then there's always the option of just mining or validating crypto yourself, right?
Yeah, if you want to get really hands-on and be a part of the network, that's definitely an option, but it's definitely the most technical and involved approach.
So we've got a whole spectrum of options here, from the very simple to the very complex. And I'm guessing each one comes with its own set of risks and rewards.
Exactly, which is why it's so important to do your research and understand what you're getting into.
Absolutely. And speaking of getting into it, let's talk about those crypto exchanges you mentioned earlier. How does that whole process work? Walk me through it.
Sure. So the first step is to choose a reputable exchange.
Reputable is key. We don't want to get scammed.
Right. Security is paramount. You also want to make sure they offer a variety of coins, so you have options.
Makes sense. It's like choosing a bank trust, and options are key.
Exactly. So once you've found an exchange you're comfortable with, you create an account, and then you fund it with, well, regular money.
Good old US dollars.
Right. That's called fiat currency, by the way. So you're essentially converting your fiat currency into cryptocurrency.
Fiat to crypto. Got it. And then can we finally go shopping?
Then you get to go shopping. You research the different cryptocurrencies available on the exchange, decide which ones you want to buy, place an order, and boom, you're a crypto investor.
Okay, so it's not as complicated as I thought, but quick question. Once I've bought my digital gold, where do I actually keep it? Like, do I just leave it on the exchange?
That's where digital wallets come in. They're basically software programs that store and manage your cryptocurrency holdings.
Oh, okay, so it's like my online banking app, but for crypto.
Kind of, yeah. There are two main types. Exchange-hosted wallets, which are linked to your account on the exchange, and then independent wallets, which give you more control over your private keys, but also more responsibility.
So it's about balancing security and control. Gotcha. But we've only talked about buying and holding individual coins.
Right. And there are other ways to get involved. There are actually companies that are focused entirely on cryptocurrency, or at least partially.
So if I'm not comfortable picking individual coins, I can invest in these companies instead.
Exactly. And it's not just the mining companies or tech companies. There are all sorts of companies jumping into the crypto world.
It really does feel like the Wild West out there. So I'm guessing all these different investment options come with different levels of risk, right?
Absolutely. Which is why it's so important to do your due diligence and understand the risks involved before diving in.
Okay, so let's talk about those risks. We've touched on volatility, but are there other things we should be aware of?
Well, one big one is regulation. The crypto world is still relatively unregulated, and governments are still figuring out how to approach it.
So there's a chance that regulations could change drastically and impact the market.
That's right. And we have to remember even the possibility of crypto becoming illegal in some places is a risk, however small. It's definitely something to keep an eye on.
Okay, regulation, duly noted. What else?
Well, scams are another big risk. Unfortunately, because this is a newer space, it attracts some bad actors looking to take advantage of people.
Ugh, scams are the worst. How can we avoid those?
Research, research, research. Don't just jump into something because it's trendy or because someone promised you'll get rich quick.
Right, if it sounds too good to be true, it probably is.
Exactly. Stick to reputable exchanges, use strong passwords, enable two-factor authentication. All the usual online safety tips apply here.
Makes sense. But beyond the financial risks, there's also the whole ethical side of things, right? Like with all this talk of digital money and decentralization, it feels like uncharted territory.
Yeah, that's a really important point. And to be honest, it deserves its own deep dive. But I think the key takeaway for now is to approach crypto with a balanced perspective.
Recognize both the potential A and D, the risks.
Exactly. It's not all sunshine and rainbows, but it's also not all doom and gloom.
Okay, so we've covered a lot of ground here. We've talked about what cryptocurrency is, the technology behind it, the different ways to invest, the risks involved. Phew, I'm already feeling more informed.
Great. But we're just getting started. Now that we have this foundation, we can start exploring how to actually evaluate and choose specific cryptocurrencies.
Okay, yes, that's what I really want to know. How do we separate the wheat from the chaff? Because with thousands of options, it's overwhelming.
I hear you. And that's exactly what we'll tackle next.
Okay, so we know there are tons of cryptocurrencies out there. How in the world do we even begin to choose?
That's the big question, right? It's like walking into a candy store with a million different choices. Where do you even start?
Seriously. It's tempting to just pick the one with the coolest name or the one that everyone's talking about.
The hype machine is strong with this one.
But I have a feeling that's not the best strategy.
Definitely not. You really have to dig deeper and do your research.
So what's step one? How do we even begin to make sense of this massive crypto landscape?
Well, I would say the most important thing is to understand the underlying technology of a cryptocurrency. Like, what problem is it actually trying to solve? How does it work? What makes it unique?
Okay, so we need to look beyond the hype and really understand the tech behind it.
Exactly. And that's where white papers come in.
White papers? Sounds kind of boring. Like, are we back in college?
Haha. I know they can sound intimidating, but think of them as like the instruction manual for a cryptocurrency.
So, like, if I'm building a piece of furniture, I want to read the instructions first, right? I don't want to just start hammering things together.
Precisely. The white paper outlines the technical details, the goals, the vision for the project.
Okay, so reading the white paper is crucial. What else?
Well, you want to look at the team behind the project. Who were the developers? What kind of experience do they have? Have they had any success in the past?
Right, so it's kind of like evaluating a company before you invest in its stock. You want to know who's running the show.
Exactly. And another thing to look at is the community surrounding the cryptocurrency. Is there an active and engaged community of developers, users, supporters?
That makes sense. A strong community could be a sign that the project has legs, that it's not just a flash in the pan.
Absolutely. And social media is your friend here. Check out the project's presence on Twitter, Reddit, Telegram. Those are all great places to get a feel for the community.
Okay, so we're reading white papers, checking out the team, getting a sense of the community. Anything else we should consider?
You'll probably come across a term called tokenomics. It refers to the economic model of the cryptocurrency.
Tokenomics, huh? Sounds complicated.
It can be. But it's basically about things like the total supply of tokens, how they're distributed, are there any mechanisms for burning or staking tokens, stuff like that.
Okay, and why is this important?
Well, it can give you some insight into the potential value and scarcity of the cryptocurrency.
So it's kind of like understanding supply and demand, but for the crypto world.
You got it. It's all about understanding the forces that might drive the price up or down.
Okay, so we're gathering information, we're connecting the dots, we're building a picture of this cryptocurrency. What's next?
Well, once you have a good understanding of the fundamentals, you need to think about your investment strategy. Just like with traditional investing, there are different approaches you can take with crypto.
Oh, interesting. So it's not just about picking the right cryptocurrency, it's also about how you approach the investment itself.
Right. You need to figure out what level of risk you're comfortable with, what your goals are, and what kind of timeline you're working with.
Okay, so walk me through some of those strategies.
Well, one popular strategy is called dollar cost averaging. This involves investing a fixed amount of money at regular intervals, no matter what the price of the cryptocurrency is.
So instead of trying to time the market and buy low, sell high, which can be tricky, you're basically just spreading out your investment over time.
Exactly. It's a good way to minimize risk, especially in a market as volatile as crypto.
Makes sense. I'm all about minimizing risk. What else you got?
Another strategy is value investing.
Ooh, value investing, like Warren Buffett style.
Exactly. So it's about identifying undervalued cryptocurrencies, ones that have strong fundamentals, but maybe haven't been fully recognized by the market yet.
So you're basically trying to find those hidden gems before everyone else catches on.
Exactly. It takes a lot of research and analysis, but it can be very rewarding if you get it right.
Okay, so we've got dollar cost averaging, value investing. Any other strategies we should know about?
Another one is index investing, which involves investing in a basket of cryptocurrencies that track a specific index.
Ah, so it's kind of like investing in a crypto ETF, right?
Exactly. It's a way to diversify your portfolio and get exposure to a broader range of assets without having to pick individual coins.
Love that. I like the diversification aspect. Makes me feel a bit safer.
And then there's trading, which is all about buying and selling cryptocurrencies in the short term to try to profit from price fluctuations.
Okay, that sounds way more high risk, high reward.
Definitely. Trading requires a very different skill set. You need to be able to read charts, analyze trends, and have a good understanding of technical analysis.
Yeah, it's not really my style. I'm more of a set it and forget it kind of investor.
And that's totally fine. There's a strategy for everyone. The key is to find one that aligns with your risk tolerance and your goals.
Got it. So we've talked about different investment strategies, but how do we actually evaluate specific cryptocurrencies? Are there like key metrics we should be paying attention to?
Absolutely. One of the most important is market capitalization, often shortened to market cap.
Market cap. Remind me what that means again.
It's basically the total value of all the coins in circulation. It gives you a sense of the relative size and importance of a cryptocurrency.
So the higher the market cap, the bigger and more established the cryptocurrency.
Generally, yes. Although it's not a perfect measure, you also want to look at trading volume.
Trading volume. That's how much the cryptocurrency is being traded, right?
Exactly. High trading volume usually means it's easier to buy and sell the cryptocurrency without dramatically impacting the price.
Okay, so we're checking out market cap and trading volume. What else should we be looking at?
Price history is another important one. Look at how the price of the cryptocurrency has performed over time.
So, like, has it been going up steadily or has it been crashing and burning?
Yeah, basically.
Yeah,
You want to get a sense of the cryptocurrency's volatility.
makes sense. We want to know what we're getting ourselves into.
And while past performance doesn't guarantee future results, it can still give you some valuable insights.
Right. Like, is this a wild ride or is it a more stable investment?
Exactly. You want to match your investment to your personality and risk tolerance. And one last thing I would add is to consider the cryptocurrency's utility.
What do you mean?
Does it actually have a real-world use case? Does it solve a problem? Is it being used to create something valuable?
Oh, I see. So it's not just about like holding it and hoping the price goes up. It's about understanding the potential value it brings to the world.
Exactly. That's where things get really exciting.
Okay, this is a lot to digest, but it's all starting to make sense. So we're looking at market cap, trading volume, price history, utility, and don't forget about tokenomics and the white paper.
You got it. It's all part of the puzzle.
Oh, and can't forget about taxes.
Right, taxes. Always got to remember those.
I know, the fun never ends.
Remember, the IRS considers cryptocurrency as property, not currency. So any gains you make from buying and selling are subject to capital gains taxes.
Ugh. Okay, so we need to be mindful of that. It's not just about the potential profits, but also about what we'll actually take home after taxes.
Absolutely. And the tax rules can be tricky, so it's always a good idea to talk to a professional.
Good advice. But with all this information, I'm still feeling a bit overwhelmed. How do we actually put this all together and make a decision?
Well, there's no magic formula or perfect answer. It's a combination of art and science.
Yeah.
You have to weigh all these factors, do your research, and ultimately make the best decision you can based on your own situation and risk tolerance.
So it's about being informed, being thoughtful, and being realistic about our goals.
Exactly. It's about building a diversified portfolio of cryptocurrencies that you believe in and that align with your overall investment strategy.
Okay, so we're building a puzzle, we're gathering all the pieces, we're researching, analyzing, and then we have to fit them all together to create something that makes sense for us.
I like that analogy. And remember, this is a journey, not a sprint. The crypto world is constantly changing.
So be prepared to learn and adapt as we go.
Exactly. That's part of the fun.
Okay, so we've talked about how to evaluate specific cryptocurrencies, but before we get too deep into that rabbit hole, I think it's important to zoom out a little bit and talk about the bigger picture.
The macro view of crypto.
Exactly. What are the big trends and developments that could impact our investments and the future of crypto as a whole? All right, so we've explored how to choose specific cryptocurrencies, but let's zoom out a bit and talk about the big picture, the stuff that could really shake things up in the crypto world.
Yeah, the forces shaping the entire landscape.
Exactly. What are some of those big trends and developments we should be paying attention to?
Well, I think the most fascinating thing is the evolution of blockchain technology itself. We're still so early in the game.
It's like the internet in the 90s, right? We know it's going to be huge, but we don't even know what huge means yet.
Exactly. We're already seeing new applications of blockchain popping up all the time, like in supply chain management or decentralized finance. We're even starting to see it in digital identity and voting systems.
Wow, it's like blockchain is becoming the foundation for a whole new digital world. It's mind-blowing.
It really is. And as the technology keeps getting better, I think we're going to see even more creative and groundbreaking uses for it. Things we can't even imagine right now.
That's so exciting. But what about the more immediate future? What are some of the trends that could impact the crypto market, say, in the next couple of years?
Well, one big trend is the growing institutional adoption of crypto. We talked about MicroStrategy adding Bitcoin to their balance sheets, but it's not just them.
Right, more and more companies and institutions are getting involved.
Exactly. We're seeing major financial institutions dipping their toes in the water, offering things like crypto custody services. Some are even developing their own crypto products.
So it's like crypto is slowly but surely becoming part of the mainstream financial world.
Precisely. And that's probably going to continue, which should hopefully lead to a more stable and mature market, less of a Wild West.
Yeah, I like the sound of that. But what about regulation? We talked before about how that's still a big unknown for crypto.
Oh, absolutely. Regulation is a huge factor to watch. Governments around the world are still trying to figure out how to regulate this new asset class. And any major policy changes could have a massive impact on the market.
So regulation is still the wild card here. It could either be a boon or a bust for the industry.
Exactly. And then another trend worth paying attention to is the growing interest in sustainable cryptocurrencies.
Sustainable crypto. Now that's interesting. Tell me more.
Well, as you know, mining some cryptocurrencies like Bitcoin can use a ton of energy. And there's growing concern about its environmental impact.
Right, that's been a big topic of discussion.
So there's this push to develop more energy-efficient mining methods
Hmm.
and to explore other consensus mechanisms that aren't so energy-intensive. It's about making crypto more eco-friendly.
It sounds like the crypto world is becoming more environmentally conscious, which is a good thing.
Absolutely. So yeah, there's a lot happening in the world of crypto. It's constantly evolving, which makes it both exciting and challenging.
It really does feel like we're standing at a pivotal moment, like something big is about to happen.
It's definitely a fascinating time to be involved. But as with any new technology or emerging market, it's crucial to be cautious, do your research, and not get swept up in the hype.
Great advice. So we've covered a ton of ground in this deep dive. We've explored what cryptocurrency is, how it works, the different ways to invest, the risks, the potential rewards, even the future trends. It's been a wild ride.
It has. But hopefully you're feeling a bit more informed and confident about navigating the world of crypto now.
Definitely. But I also appreciate you emphasizing that this is just the beginning.
Right. The learning never stops with crypto. It's always changing.
Exactly. Speaking of beginnings and journeys, you mentioned earlier that investing in crypto is a journey, not a destination.
I did. And I think that's really important to remember. Crypto investing is a long game. It's not about getting rich quick. There will be ups and downs, and it's about staying the course.
So patience and persistence are key, and not being afraid of a little volatility.
Exactly. You got to embrace the roller coaster.
I'm working on it. But seriously, it's inspiring to think of crypto as more than just an investment opportunity. It's a technological revolution that could change so many things.
And who knows what the future holds. It's going to be an exciting ride, that's for sure.
Well, before we sign off, any final thoughts for our listeners who are ready to embark on their own crypto journeys?
I would just say, don't be afraid to explore. Do your research and see how cryptocurrency might fit into your own financial journey and your vision of the future.
Love that. And for those who want to dive even deeper, we highly recommend checking out the full Investopedia article, How to Invest in Cryptocurrency. It's full of helpful information and resources.
And thank you for joining us on this deep dive into the world of cryptocurrency.
Until next time, happy investing.